Welcome to Saxo Bank's morning call on Thursday, the 14th of February. Risk sentiment is still present in markets and not seem to be rolling over yet, although in China it slowed down a little bit in the session. We have seen small gains on top of improving trade data from January. Also the imports PMI figures improved a little bit in January, but there's a lot of seasonality effects, how the lunar year in China, how that is positioned in it's 10 days before this year, so it affects the numbers, and I don't think it's too early to say whether China is really have turned a corner here. So we probably need to wait a couple of more months to be completely sure. But if you look at the chart here, we have the CSI 300 index futures, as we've been showing for now a little bit more than a week. We pushed through that resistance levels that we marked with the area, and then we have just pushed through above the 200-day moving average, which was coming down. And then the red line is sort of highlighting the resistance level and the peaks from September. So give it a 0.5% more from here, and we'll bounce into that red line. And I think this rally seems a little bit overextended. I don't think the macro data and the leading indicators are warning massive risk on from here. So I'm still taking a cautious and defensive view on equities. But Matthias, you're seeing something else on the Chinese data?
Yeah, if you look at volatility, we don't see that much. Risk averse is coming down a little bit. But what's interesting is 1 year forward is now negative. So the whole forward curve up to 1 year trades with negative points.
Okay, and is that first time in?
Yeah, this is the first time in the back end. So, if you're looking for option strategies, for example, dollar China calls is now as cheap as it can be because we have negative points for the first time in the back end. Even if vol's holding up a little bit, but the forward points makes calls extremely cheap at the moment.
Okay, interesting. And we also had news coming out of the U.S. government. They are now planning to extend the March 1st deadline on the U.S.-China trade deal by 60 days. And it was interesting to know that it was almost like it was front-loaded yesterday's session because you would have imagined that the market would have reacted a little bit more positively. But we have mixed data coming out, and I think it's Europe that is worrying global investors right now. We have data coming out this morning that Germany just avoided a recession in the fourth quarter. There was unchanged GDP growth, and they had a negative print in Q3, so they just barely avoided that. But it was a preliminary figure, so let's see how the updated figures turn out in the coming month. If you look at this chart here, that's over the futures on the DAX index. As you can see here, we're very much range bound here, and in general, sentiment in Europe looks extremely weak. It has been battered by the slowdown in China because of that trade link between Europe and China, and then Europe still has a lot of its issue. We have Brexit coming. We have still the Italian issue and a weak banking sector. So there are a lot of issues on our hand, and I think watch Europe for clues if this rally can continue, and if Europe doesn't really pick up soon, I would definitely fade this rally in equities. But Matthias, talking about Europe, John mentioned yesterday the euro dollar. We sort of really at the low end of the recent ranges. What are you looking at on options and in general the cross?
Yeah, but volatility in general is really low, and we are trading at multi-years low or close to multi-years low in the most currencies. Euro dollar, I have a chart with me here.
Yeah.
We're trading close to the low in euro dollar. We are getting closer and closer to the 112 level, the low from November.
Yeah.
We've taken out the year-to-date lows now today. We dipped down to 1250, back up now a little bit in the morning. Vol is still close to the low. 3 months trading at 6.5%. We still have a lot of nice carry in euro dollar, so the puts are cheap. So we're looking to buy, for example, the 3 months 112 put cost around 87 pips.
All right.
Risk reversal is fairly cheap, trading at normal levels, I would say. So we can still finance this put by selling some calls, for example. You can finance it with selling a 3 months 116.50 call, would give you back half of the premium you paid for the 112. So there's some opportunity now with the low volatilities if you think we can get out of this range in euro dollar.
Exactly. I think it's interesting with the whole euro dollar. So a weaker euro is obviously good for Europe's export sector, and Europe probably needs to have a weaker currency right now given the economic weakness. But as we talked about in our team yesterday, this stronger dollar, if that continues for a couple of months, it might. If euro dollar goes down, it might improve Europe's situation on a relative basis. But a stronger dollar from here will basically could potentially kill growth even further globally, because the US dollar is the international currency, the reserve currency, and it's done in all trading matters. And we have seen whenever the dollar is strengthening, it's weakening emerging markets. So I think it's very important to watch where the dollar goes from here. But staying with the currencies, Matthias, you're also looking at Swedish krona. I know John Hardy mentioned that yesterday, but what are you looking at from sort of a volatility perspective?
Yes, same story as with most of the currency pairs. I mean, we're trading at low volatility levels. We had a hawkish Riksbank, or it was not as dovish as the market expected. We had the same in Kiwi yesterday. So we saw a little bit stronger Stocky yesterday after the Riksbank minutes. And stock has been the worst performing currency so far this year.
Okay.
So we think we have a little bit of catch up to do. So Euro Stocky, we think we can have some potential now going back down to the bottom of the range to 10-20 level. So again, volatility, the blue line is trading on the lows or close to the lows. So buying some puts, I think that's interesting. For example, 1 month's 10.35 would cost around 300 pips.
All right. It's also interesting to note that the Swedish krona has weakened in the same period as you have seen a very strong risk-on sentiment in China, because the Swedish economy, although it is changing a little bit, it still has that cyclical exposure, and it's tied to global growth. So if China is turning around, it should strengthen on a relative basis the Swedish krona. All right, but staying actually with options, we posted yesterday on home.saxo an option strategy to play the Nvidia's earnings, which are the fiscal year 19 Q4 earnings, which ended in late January, and that earnings will be out after the market close. If you look at the trade idea, which was done before the market opened, and you look at what of sort of the initial fills we could get in the beginning of the trading session, we were filled on our call 157.5 at $3.15, and our put at 145 at 2.5. So as we mentioned in the trading strategy, which you can see via the link, we're looking for a minimum an 8% move in either direction to be in the money, and that's excluding commission. And the Nvidia shares has actually moved in absolute terms around 8% on earnings. So this long strangle idea could actually be in the money because there's a lot of uncertainty. So we saw obviously betting on some of this similar move as what we saw in the last quarterly earnings release, where the share price actually moved 18%. So it might seem a little bit expensive, this long strangle, but having said that, there's so much uncertainty about Nvidia. So any positive surprise or negative surprise can, I think, easily move the share between 10 and 15%. But that real reaction we will not see until tomorrow, when we have the cash session in the US. Very quickly going through the earnings calendar. There's still a lot of earnings coming out. This is actually one of the bigger days. If you look at the calendar here, we have Nvidia, which will be out. And then we have Applied Materials is also an interesting one. Schneider Electric, Nestlé, Air Liquide are some of the key names here in Europe today. But we have Airbus, who have already reported. Those shares are up 3% in pre-market, and the results are looking pretty okay. They are, and also have now, they'll shut down the A380 production, which is that double-decker jumbo jet. The backlog of orders is simply too thin. And then finally, we have the macro calendar. Not a big day. We have the Eurozone fourth quarter GDP preliminary. It is sort of a lagging indicator, so I don't know how much the market will react to that. And then we have the PPI retail sales, and we will have the initial jobless claims at 13:30 GMT in the US. And otherwise, it's going to be a quiet day on the macro. So I don't expect a big rally in equities, but I could be wrong. I still lean towards that cautious defensive view, at least. And that concludes our morning call for today, and we'll be back same time and place tomorrow. Thank you.